Hello traders, welcome to my lesson number 1 is trading. Now, lesson number 1. So this being our first lesson, look at market structures. We're going to learn how to identify market structure as a pro. Are we together? So we're going to look at market structures. Now, under market structure, we have 3 major market structures. So we're going to look at them one at a time. For now, we are going to begin with the bullish or the uptrend. Others call it the upward move. They're just different types of terminologies. The market, okay? So this is the color even for the bullish trend. Oh, this one is way better. So the bullish trend. So I think I just write under the market structure, in the market structure here, so trends, yeah. Now, speaking on the bullish trend, yeah, the bullish trend consists of price going up, which consists of price going up. So, in this type of a market, you find out that many people are buying the market. Are we together? So, for instance, as we look at this market, it goes upwards. Now, the idea is always very simple. Are we together? The idea is always very simple. The market is now creating a high Then, first of all, the market created a low. Sorry. Now there was a low over here that the market created. Then the market came and created a high. After creating the high, the market creates a higher high. No, not the higher high. First of all, it creates a higher low. After a high, we then have a higher low. Then after the higher low, the higher high. After the higher high, we now have another higher low. Now, after the higher low, we now have another higher high. And then again we come and get another higher low. So the market continues in that manner. this way, and this way. So that is how you identify an uptrend. Price creates a low, then it creates a high, then a higher low, a higher high, a higher low, a higher high, a higher low, going upwards. Are we together? So that becomes your uptrend. Now, this is just a simple view on the uptrend. Now we have a deeper view. This one is just shallow, but we have a deeper view on the uptrend. So now, the actual thing that the price does, whatever price does, let me clear these ones. Now, whatever price does is that price does not just take a clear path as I was drawing before. Now, price acts in a very how will I put it? Is complex a right word? I really don't get it. Let's say confusing manner. For a beginner, it's in a very confusing manner. If I show you the clear lines I had put here on the market, it's very different, because now price will have a lot of story to tell. You will find even price just moving this way. So price just moves. Drops again, then moves. But you find that it starts now in this. But it's still an uptrend. Why? Why do I say still an uptrend? This one is still an uptrend. Regardless of how price is moving here, it is still an uptrend. It is still an uptrend because price has a low. After creating a low, it created a higher high. A high first. After creating the high, it created a higher high. Then a higher low. Then another higher high. Another higher low. Now look at this. Price breaks this higher low. Many people will be like, what do you do after there? We learn that as time goes by. So it has created a higher high. Now creating another higher low. We now have another higher high. And now we have another higher low. So you can see it's still an uptrend, but inside here there is a lot of noise. Are we together? And we do not assume this noise when it comes to the real market structure. Right now we are just using drawings to see, okay? But when we'll be using the charts, we will come to learn something, that the markets over here are the most important. The stories inside the markets are the most important things we need in order for us to know the actual price action, the actual market structure, and so much more. It consists of these stories inside it. Are we together? So this is just another way of trying to go deeper on the market structures. Now, we will be looking into a chart. Let's clear these zones. So we're going to look at a bullish uptrend. So I'm going to bring back the candles. Okay, this is a Euro USD chart. So I don't know if you can see an uptrend in it. Yeah, very nice. Now, over here we can see a good uptrend in the Euro USD chart. And here, and let's take it. Now let's look at an uptrend on this chart. So we don't, it does not have a lot to talk about, but it has something. So I want us to use this something to learn. So first of all, this one being our low, and together, and this one being our high. Just that. And then this one being our higher low. I hope you guys are getting something. Good. Now, this one also being our higher high. So we already have a good identified structure. A low, a high, a higher low, a higher high. Are we together? So this one is already what you look into. Okay? So you don't need to complicate or overdo everything in the markets. Since you already have this, many people now consider this as an uptrend. Now this one is a bullish trend, an upward move. So people buy in this market. But now let's look at what the market has been doing. The market comes up, then starts creating lot of stories. I always call these stories. Then it comes up again, starts creating another story. These ones are all stories. Comes up. So we'll still have another story as we do something called a retracement. Now we find the word a retracement. What is a retracement? A retracement is the move back to a certain point so that price can move up. Now let's hide these charts here and look at the market. You see the way I've drawn the market, the zigzags inside it. Now, what is a retracement? Now, we have an impulse and we have a retracement. So, let's use something more creative. So here, this is the impulsive move. Impulsive move. Now, then this one here becomes the retracement. Retracement. This one is the retracement. Now this move downward is the retracement. So this one is the impulsive, and then this one is the retracement. And then you have another impulsive move. I think on this one, we will consider still a retracement just for the classes, for the lessons, but we will go deeply when we start looking at point of interest and other things. So that's, sorry, the impulsive move will be here, and the retracement will be here. So as you can see, the market is moving up, but we now have a retracement, then we have an impulsive move, then we have a retracement, then another impulsive move. Are we together? So the market has stories inside it. So that is a bullish trend, and we've seen that it has stories inside it. Are we together? Up to there, I hope everybody understands a bullish market, both shallow and in depth. So let's look at another market structure. So right now, we're going to look at the second market structure. We have the bearish, the downtrend, or the downward move. Can you guys hear me now? Sorry about that. Sorry about that. So, as I was saying, this is the second market structure we're going to look into. It's the bearish, the downtrend, or the downward move. So, on this type of market structure, we find that many traders now sell the market. Sell. Let's use first color for it. It's always red. Are we together? Now, on this market, it's now the opposite of the bullish market. Okay? So, price starts from up, then comes down, then goes up, goes down, goes up, down, up, down, up, down, up, up. That way. Okay? Now, so this is what price does. So on this one, now price starts with a high. Okay? After a high, it creates a low. Now, after creating a low, price now creates a lower high. After creating the lower high, now price creates a lower low. So price continues in this manner towards the downside. Comes here, creates a lower high. Here again, creates another lower high. Again here, another lower high. Another lower high. So it goes creating lower highs and lower lows. In that manner. So when it's moving down, it's creating a high first, then a low, then a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, lower high, lower low, lower high, lower low, lower high, lower low. So this is a bearish or a downtrend or a downward move. In this move, people sell the market. Are we together? So here we sell the market. On the bullish market, we buy the market. Okay? So they are two different and opposite of each other. So a bullish market is the opposite of a bearish market. For a bullish market, we buy. For a bearish market, we sell. Always remember that whenever you see a price or a market creating lows, lower high, lower low, lower high, lower, that manner, just know we are looking for sales in that market. When you see it doing the opposite, now you start looking for buys in the market. Are we together? So let's clear this. And for your own information, the same way we looked into the bullish market, the markets do not move still in straight lines just as I have drawn. They move in zigzag stories. The market gives us a lot of stories. I think I'll end it from there. Now, we can see that as much as the market is giving us a lot of story, it's still creating a high. It's still creating a low. It's creating another lower low. And before it created a lower low, it has a lower high. And in that manner, we can identify it as a bearish trend. Now, to be more precise and to be more clear and to go in better depth, not confusing anyone, so we are going to look into the market structure itself. Okay, we are going to look into the market structure itself. So, sorry. Let's return the charts back. Now, we still use the Euro USD chart to identify a downtrend. And you can see now we have a better downtrend. So, price here creates a high. Then after creating the high, it comes and creates a low. Then after creating the low, it creates a higher high. Now, not high, a lower high. Then after creating the lower high, it creates a lower low, creating another lower high. Then another lower low, and another lower high, and so on. Now, this is now a clear move. But now let's look at the complex move here of the market. You can see price come here, 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 here. Then it comes up, it comes up, it comes down, comes up, then it moves down, up, down, up, down, up, down, up. Then here, I'll take everything so that you can see very clearly that price does not move in an actual straight line. In this manner, you can see that price just moves. Let's end it from there. Okay, now we can see whatever the market has been doing clearly. So the market created a high over here. After creating the high over there, it now came again and created a low. So which one will be our low? I guess this will be our low. This type of move, this could be our low. But now, if we look deeply into it, this is where our low should be. Why am I saying this? Because after this high, price moved to this point. This is where it made a low, and then it started going up. So this is the lowest of these points. Okay, and also we can see that if we identify this our low, then that means that we changed our trend into a bullish move after breaking this lower high. But since when we look at it at how will I put it, at a more insightful manner, I don't know if that word matches this criteria, but when we put it in a very clear manner, this should be our low, and then this point should be our lower high. Over here should be our lower high. We break this area. Okay, after breaking this area, this one becomes our lower low. After that becoming our lower low, we now have our lower high over here. I hope you guys are getting what I'm trying to say. Okay, so this low, let's put it this way so that it can be more clear that it broke. So price broke the low, created a lower low, then came back and made a lower high, then created another lower low, then created another lower low, and then the lower low created another lower high. So that is how the market is. So this one inside here, these are just stories. Are we together? They are stories that the market tells. The market does not move in a straight line. And if you are lucky to get an impulsive move which is straight, then you must be ready to be patient. Okay, you must be patient in the market for you to get such moves. Okay, so let's clear this up. The next pattern you're going to look into, is now the consolidation. Number 3, we have the consolidation. Other people call it accumulation. If I'm not wrong, accumulation. Or I had someone call it the ping pong trend, but I won't call it the ping pong trend. Let's use a consolidation and accumulation. They're the most common. So in this type of a market, you find that the market only creates a high and a low. So the market does not, arranging markets, arranging markets. We must say that good. That's very good. Ranging markets. Yeah. So we have the consolidation or the ranging markets. In this type of a market, you find that price creates only highs and lows. Okay, it creates only highs and lows. So the price runs in between a certain area. Okay, let's use first of all this. So the market is now moving in between a certain range. Okay, it could be a certain price range. For example, it could be like, for now, as we're looking at the Euro USD chart, it could be in between, let's say 1.06, okay, 1.0600 to 1. Let's say like 1.400. So price just 1.1400 there, price just moves in between 1.1400 and 1.0600. Are we together? So price moves in between that area. Now that is what we call a ranging market, a consolidating market, or an accumulating market. So also in this one, the market still gives a story. But for this one now, many people are always like, buy at the high, use this symbol at the high, and then sell at the low. Are we together? No, sorry, it's the opposite. It's the opposite. Sell at the high, buy at the low. Buy at the low. So you sell here, buy here. Now in this type of a market, price only creates a high and then it creates a low. Okay, it's only a high and a low. Nothing else, nothing more complicated. It just creates a high and low. But now, the market still has a story when it comes to this type of a trend. So we are going to look at the story the market gives. So for instance, this was your range. There and here. Okay, now the market comes from up, taps into this support, does this, comes back, so it won't move this way. So how will it move? The market will come in like this. You see, Now the market starts giving you stories. Okay. To talk, you shout. So in that manner, so price moves in this manner. But at the end of the day, it has created a high, a low, a high, a low, a high. Are we together? It has not created anything that you can say that now it's bearish or bullish. It's just consolidating. It's just accumulating. It's like a ping pong. You see, when you're playing the ping pong and you're bouncing the ping pong on the floor, your hand, the palm of your hand, it's like playing basketball. You just bounce the ball. Okay, so the ball hits the floor, your hand, the palm, the floor, the palm, the floor, the palm. In that manner, that's an accumulation market or a consolidation market. But now this one, you can look into it in a very different manner, because you now look at the price. Look at the price. Okay, you look at the price range in which the market is moving. That's why I use the first example. When your market is at 1.0600 and 1.1400, the market just bounces around that area. That is your price range. Are we together? So let's look at an example. Let's see if we can catch an example on the Euro USD. Let's see if we can catch a good one. This is a good example of accumulating market. Now we can see that price is within this range, and we can see also within this range. Are we together? Sorry about that. It's within this range. Okay. Now the market has been playing ping pong within that range. Are we together? You can see price came from down here, okay, and got here, then it came down, now price is actually hanging over here. But now let's look at it at a lower time frame. Maybe then we can get a visible area. Now this one is better. Now look at it in this manner. Price hits here, let's get a clear story. So our price came from down here, came up, came down, came up, came down, came up, down, up, down, up, here, HK, here, 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 up, down, up, down, up. You can see the manner in which price is moving. Yeah. You can see that manner which price is moving. So price moves, it comes up, down. So this is now our trading range. Price is moving in between this range. Okay, so price is moving in between this range. So what next do someone expect? You have to expect that as price is moving this manner, price might decide to drop to this area again. Okay, now let's look at it in the drawing manner without the charts. You see how price has been moving? Yeah, a lot of story, but still in the same range. So for me personally, I always consider a range. Yeah, so maybe I could say price is in between the 1.48, okay, the 1.148 to the 1.136 range. So this is my area. Okay, so in between is where I know I could target this point or I could target this point, either of the two. So unless I wait for price to maybe show me it wants to break the ranges, then I can consider that the price now should create a better structure. If it breaks this point, I will consider it's a bullish market. It's going to give more bullish move. If it breaks this side, I will consider it as more bearish move. Up to there, I think everybody understands the three types of market structures. Yeah, I think everybody understands the three types of market structure. I think I don't have any much more from there. If you have a question right now or later, you can hit me up and maybe we could look into what you have to say. So thank you very much for watching, and thank you very much for joining in for the first lesson. The second lesson will be dropped tomorrow. Have a great day.